this class we'll be learning the different procedures for the issue of shares and how the accounting treatment will be taken for issue of shares. And here, so the procedures for the issue of shares. The face value of a share is the par value of the share. It is also known as nominal value or denomination of a share. So this is the most noted point, and it would be expected in the multiple choice question. The face value is the par value of the share, and it is also known as nominal value or denomination of a share. To issue shares of a company, it need to follow the definite procedure which is controlled and regulated by the Companies Act and Securities Exchange Board of India. So two things rule. One is the Company Act, that is Company Law Board. The other one is SEBI, in short form we call as SEBI, Securities Exchange Board of India. So these two things controls and follow-ups the entire procedure for the issue of shares. So there are different ways of issue of shares. One, for consideration, which means other than the cash. So you may issue of shares for purchase of your business, you may issue shares for purchase of an asset, or you may issue shares for acquiring some reputation of a brand or some reputation of an actor. So for some consideration, you may issue share, or to the employees also you may issue share, right? And so in a fine year to appreciate their contribution, you may issue shares. So these are, we can call this for consideration other than cash. The other form of issue of shares is that for cash. So then happens the issue of shares for consideration other than cash. Sometimes shares are issued to the promoters of the company in lieu of the services provided by them during the incorporation of the company. Sometimes shares are issued to its employees in lieu of their services provided by them during the entire process of the company's promotion. Sometimes shares issued to the issuer, to the supplier of a fixed assets, installation of plant and machinery. So in lieu of the contribution provided by them during the special occasion of the company. Here, the issue price of these shares is normally debited to goodwill account if it is issued to the promoters of the company, or if it is issued to the suppliers, then we used to debit the concerned asset account, say plant and machinery, land and building account, to share capital account. So here the entry would be, the journal entry would be goodwill account debited to share capital account. In case a company does not have sufficient funds for the purchase of fixed assets or for payment of creditors, it may offer and allot its shares to the vendors or creditors in lieu of cash. Any allotment of shares against which cash is not to be received is called issue of shares for consideration other than cash. For example, building is purchased and payment is made by the issuing shares. Since we do not have sufficient funds for the purchase of that particular fixed asset. So in case of purchase of assets like building, machinery, stock of material, etc., then we need to pass a journal entry. One is the purchase of assets account debited to vendors account or assets account debited to creditors account if it is payable for purchase of goods. Second entry we need to pass vendor's account or creditor's account, as the case may be, debited to share capital account. So here issue of shares each fully paid up to the creditors or vendors, as the case may be. Second, when the issue of shares for cash, if it happens, issue of shares for cash, it happens in general. Shares are issued for cash. The company may call the share money either in one installment or in two or more installments. But the company always collects this money through its banker. And so we say in even cash we can debit or credit the bank account. Receipt of shares. So at the time of receipt of shares, so what are the entries to be passed? So one is the main entry is on receipt of application money. The company may receive the share money in one installment along with the application. In this case, the important journal entry which have to be passed in the books of the company is on the receipt of application money. So bank is receiving on behalf of the company. So bank is a representative personal account. So personal account means the rule is debit the receiver. Hence bank account debited to share application account. Here the application money received on so and so shares of rupees some amount each. So maybe share value, face value would be 100 of that. So 20 rupees would be an application money. So if they receive 1000 shares application money, the entry would be bank account debited to 20,000 to share application account rupees 20,000. So as soon as we receive, we can't keep that share application account for a long period. So what we need to do, as soon as we receive, then we need to transfer the application money to share capital account. So here the journal entry would be share application account debited to share capital account. Hence here money is any application money transferred to share capital account. Second, when share money received in two or more installments, it happens to be because share money is to be received on the time of application, at the time of allotment, then at the time of first and second call. So here, instead of receiving payment in one installment, that is at the time of application, the company collects it in two or more installments. The first installment which the applications have to be paid along with their applications of shares is known as application money. On the allotment of shares, the allottees are required to pay the second installment, which is termed as allotment money. If the company decides to call the share money in more than two installments, the other installments are termed as call money. It could be first call money, second call money, or final call money, and so on. So in this case, the transactions are recorded in journal in the books of the company. at the time of receipt of application money, the same journal entry what we have seen before, bank account debited to share application account, bank is debited since bank is representing the company, they are receiving the money. So for the receipt of application money, we need to pass this entry. Next, on allotment of shares. After receiving the application for shares within the prescribed time, the board of directors of the company proceed to allot the shares. On allotment of the shares, the application money is transferred to share capital account. So for this, we need to pass a journal entry, that is share application account debited to share capital account, being the share application for so and so shares are transferred to share capital account. Next, allotment money becoming due and received. So in earlier case, the application becomes first receipt entry used to pass, and then due entry, transfer entry. But here due entry comes before, because at the time of application we do not know who are all the people who is going to buy, who is going to apply the shares of the company. But at the time of allotment, we surely know to whom we are going to allot. We used to shortlist by using either prorate allotment or some basis. So here the allotment due comes first, later we receive the money. So in the allotment of shares, the amount receivable on the next installment, that is on allotment, becomes due. Then the journal entry to be passed for recording the amount due. Hence, when allotment money becoming due, then share allotment account debited to share capital account, being share allotment money due on so and so shares. And the receipts of allotment money. When you receive the allotment money, then on receipt of the share allotment money, the particular journal entry to be passed in the books of the company. So as the bank is receiving, representing the company, so bank is the receiver, so debit the bank account debited to share allotment account. Being the receipt of the amount due on allotment of shares. Next, calls on shares. It could be first call, second call, and final call, whatever may be. But it's the same format of journal entries which we are going to follow. Hence, let me take, just to say, it is a share first and final call account, instead of calculating into first call account, second call account, third call account, like this. So let me say this is the share first and final call account, because same journal entry we are going to pass. After the receipt of the application and the allotment money, the money that remains unpaid can be called up by the company as an event occurred. Thus, a call is a demand made by the company asking the shareholders to remit the called up amount on shares allotted to them. The company may demand the remaining money in more than 2 installments. The amount called after that allotment is known as call money. There may be one or more calls depending on the funds requirement of the company. When only one call is made, and then when the call money becomes due, then we can pass the journal entry as share first and final call account debited to share capital account, and being the call money due on so and so shares of rupees dash each. When you receive the call money after the due entry, then the journal entry to be passed for the receipt of call money. Since here also bank is receiving on behalf of the company, so bank account becomes the receiver. So bank account need to be debited. So bank account debited to share first and final call account, being the call money due on shares at rupees some amount which is specified in the call letter per share. Please make a note. If the company makes more than one call, the same accounting treatment is followed for recording the second and third call money due and their receipt too. The last call is made, we call that as final call. So whatever may be the call money is called final or second due calls, the same journal entry need to be passed. Please understand the reason behind for each journal entry, why it has to be debited and why others have to be credited, with the reasons whatever I explained. At last, when you post the journal entries into the form of ledger, all application account, allotment account, first and final call account will get balanced. Only we will have two accounts. One is bank account, the other one is share capital account, which we have balanced. One is in the liability side and the other one is asset side. If there is any arrear or did not pay, did not get the share, that either allotment money or call money from the shareholders, then that separate amount need to be called as either calls in arrears, or sometimes the shareholders will pay amount in advance. So that amount will become as a calls in advance account. So accordingly that will be segregated. So I hope you understand the basics of the issue of shares along with the procedure as well as the accounting entry. So now let me quickly summarize in 2 minutes whatever we discussed in the last 20 minutes. So that is procedure for the issue of share is controlled and overviewed by the Company Act through the Company Law Board and the SEBI Stock Exchange Regulation Act, that they will overview the entire procedure of issue of shares of the company from the time of issue of prospectus. Then after the prospectus, the company gets the application money. So we do not know from whom we are going to get the application, hence the recipient comes first, and then the transfer entry to the share capital account, and second the share allotment transaction takes place. So in this case we come to know to whom we are going to allot the shares. Hence the due entry comes first, because we need to send a call letter to deposit the allotment money. So here the allotment due entry comes next. So share allotment account debited to share capital account. Next the receipt entry follows to that. So for that we need to pass journal entry for the receipt is bank account debited to share allotment account. Next call money comes. So for call money also due entry comes first. It could be call money, could be more than 2 calls. And first call, second call, third and final call, like that. But here we have seen only the common journal entry for all set of calls as first and final call. So here also due entry comes first, later the receipt entry. It's a similar way to the allotment. Now I will show you a question. I will reveal you a question and please go through the question. We will discuss that one by one to solve the sum. So here, Phase and Fabrics Limited issued 1 lakh shares of rupees 10 each on 1st April in a fine day. The amount payable on these shares was as under. Face value is 10. So for that the denomination they have given as follows. Rupees 2 per share on application. Second, rupees 3 per share on allotment. Third, rupees 5 per share on call. So here they specifically said 2 rupees on application, 3 rupees on allotment, and 5 rupees on share on final call. Sometimes they may not give one amount purposefully. So by taking the face value of the share, you will find out the balance amount and fix up for that blank letters. For example, if the last amount they did not give dash per share on call, so the balance amount will be collected on call money. So hence 2 rupees on application, 3 rupees on allotment, so total 5 rupees collected till allotment. But the face value of the share is 10. So 10 minus 5, you will get 5. The balance amount is collected on call. This time giving yet another chance to ask the person without giving the amount due money per share on call on either first and final call or on allotment. So here we can take only the balance figure out of the face value of the shares, which is given in the first line of Face and Fabrics Limited. So for this, and now we need to make journal entries and prepare relevant accounts in the books of the company. So now let me draw a flow chart to help you to understand how this happens one by one, how the procedure of issue of shares happened as we discussed in the previous set of session. First 20-minute session we discussed that. So accordingly, let us have a flow chart and what are the entries to be passed. In the mind map, let us have the flow chart. So sometimes the question may be given in different order. Maybe the first line would be rupees 5 per share on call, rupees 3 per share on allotment, rupees 2 per share on application. So it does not mean that you need to take the call money first, second the allotment money. It also does not mean that application money is the last. So always it should be in order. First issue of prospectus happens, then the application gets generated. So application money comes first. Then as soon as the applicant supplies the share through the bank, the company then sort out the eligible applications to be issued, to be allotted. So the allotment money comes next. Then last the call money comes. So in this order, we need to pass journal entries. So make this as a flow chart in your mind map, and then proceed further. So in the application, we need to pass receipt entry first. Next is the transfer entry. In allotment, we need to pass due entry first. Next is the receipt entry. And then on the call, we need to pass the due entry first. Next is the receipt entry. So that's how we need to have a mind map of flow chart for passing journal entries for these transactions. So altogether we get around 6 journal entries. Right. Here is nothing given like any dues or any advances paid by the shares. So here we assume that the entire 1 lakh shares, the due entries were collected on time. So Face and Fabrics Limited have collected all the due entries on time, and application also collected as prescribed. Now let us discuss the solution part one by one. Now I will show you the entire answer in a single screen so that I can copy simultaneously. He was explaining the reason behind each journal entries, and I hope you have copied that in a working way. However, you can make that as a statement form, as a proper journal entries form. So the entries are now journal entries in the books of Hazen Fabrics Limited. Serial number instead of date, particulars, ledger folio number, debit and credit. First journal entry, bank account debited to share application account, being the amount received at rupees 2 per share. So for 1 lakh shares, so it comes around 2 lakhs rupees. So there itself we can make the workings 2 lakhs, 1 lakh shares into rupees 2. And then journal entry 2, that is the transfer entry. Share application account debited to share capital account rupees 2 lakhs. And then that is transfer entry. Share application money for 1 lakh shares has been transferred to share capital account. The next journal entry, that's third entry, is share allotment account debited rupees 3 lakhs to share capital account rupees 3 lakhs. How that 3 lakhs has come? 1 lakh shares of rupees 3 each. So allotment money made due on 1 lakh shares of rupees 3 per share. And the fourth journal entry is bank account debited rupees 3 lakhs to share allotment account rupees 3 lakhs. So which means the allotment money due was received on 1 lakh shares of rupees 3 per share. Now fifth journal entry is the due entry, which means the share first and final call account due debited to rupees 5 lakhs to share capital account rupees 5 lakhs. So here call money on 1 lakh shares at rupees 5 per share made due. Next, the last entry is the due money received, that means bank account debited to rupees 5 lakhs to share first and final call account rupees 5 lakhs. So here being the call money received on 1 lakh shares at rupees 5 per share. So these are the journal entries. I hope you must have copied this now. When I was explaining the time itself, you must be able to write in your notebook. At the same time now, you make it that in a professional way. So please, we also should note that although shares may be equity shares or preference shares, but if the term shares is used, it means always equity shares. It means it always equity shares. So please make this note and then proceed to the ledger accounts. So if I was explaining during the briefing the question itself, so we need to prepare the ledger accounts. So bank account, share application account, share capital account, and share allotment account, share first and final call account. In this, so a bank account will have a balance because it never get tally. So you have received 2 lakhs rupees on application, rupees 3 lakhs on allotment, and rupees 5 lakhs on first and final call. So totally we should have in bank account debit balance brought down should be 10 lakhs. So please make a note, when you post all the journal entries into the form of ledger, when you balance you will get 10 lakhs. Then share application account, that is will get tally. So please make a note, share application account, share allotment account, share first and final call account will get tally. Since all the balances are transferred, either due or transfer entry happened towards the share capital, hence that those account will get tally. So share application account, debit side you will have share capital 2 lakhs, credit side you will have bank account 2 lakhs, which means received 2 lakhs and transferred the same 2 lakhs to the share capital. So it will get tally. And then share allotment account also in the similar way. Bank account 3 lakhs, the 3 lakhs was due, so due entry and then received entry. So finally it will get tally, debit and credit. Likewise, share first and final call account also. Share capital account was the due entry, so debit side. Share first and final call account debit to share capital, so it's in debit side, rupees 5 lakhs. At the same time, when you receive the entire amount, so bank account debited to share first and final call account. So what happens in the credit side, you need to write bank account. So again you will get tally. So this is how we need to make proper entries in the form of ledger. So now let us have some quiz, question and answer session. So all the sessions we will have some quiz, question and answer session in the last few minutes, so that we can pick up what are the things we have discussed in last few minutes. So the face value of a share is, what do you call? The face value of a share is called as dash. Can you say that? Or do you want me to give 4 options? No, you can say. Yes, very good. So second question, shares in consideration other than cash are issued to whom? Are issued to whom? Yes, what is the answer? Very good. Yeah, please think that, and later I will share you the answer. And third, shares money on issued shares can be demanded by the company in lump sum or in dash. So what it means? Share money on issued shares can be demanded by the company in lump sum or in what portion? Yes, good. You are thinking very good. So last question, share application money is received by the bank from which account? From which account? I will repeat the question again. Share application money is received by the company from which account? So I hope you must have written your answer in your notebook to verify when I release the answer. Yes, the question number 1, face value of share is also called as denomination value of the share. And then the shares in consideration other than cash are issued to the vendors, to creditors, and so on. So question number 2 is, the answer is vendors or creditors. Question number 3, share money on issued shares can be demanded by the company in lump sum or in various calls, like application money, allotment money, first call money, second call money. So either they can demand by the company in lump sum or in different denominations, like different calls. Question number 4, the application money is received by the company from which? From the shareholders, not shareholders, applicant, which means share application account. So bank account debited to share application account. Here the money is received from the share applicant, so it means share application account. So I hope you are able to follow the question and answer session in a crisp way, and I also request you to make the next question and answer in your notebook as I share to you. What is the balance of share capital account? What would be the balance of share capital account? What would be the balance of share capital account? Yes, share capital account always carries credit balance because it forms under the liability side, and the other way, when you post the ledger account, the balance brought down always comes in the credit side. At the same time, when you post any recipient to the bank account, balance at the end comes in which balance? While issue of shares. I will repeat the question again. The balance of bank account falls in debit or credit after the issue of shares. Yes, it always falls in debit, since the bank is an asset and we receive money. The banks receive on behalf of the company, so the bank balance increases in our account. Hence, it is an asset. All assets count in the debit balance. Hence, the balance is debit. I hope now we discussed 6 question and answers along with the reason. Please make a note. It helps you to attend your multiple choice questions in a perfect way. Next, we'll be moving forward towards the different types of subscriptions. So, what are the different types of subscription? Yes, one is full subscription. Second type is under subscription. The third type is over subscription. A company decides to issue number of shares to raise capital. It invites public to buy these shares. Now, the situation may vary into three ways. The one way, the company may receive applications equal to the number of shares company has offered to the people. It is called as full subscription. For example, in the previous questions problem we have seen 1 lakh applications have been issued. The same applications have been taken over by the public with their exact amount. So it is called as full subscription. In case of full subscription, the journal entries would be on receipt of the application money, bank account debited to share application account. And on allotment of shares, the share application account debited to share capital account. So what happens is the transfer entry. So it is these two entries we have already seen in the previous question, but as a part of full subscription, just I was explaining. The second, the under subscription. When the company does not receive applications equal to the number of shares offered for subscription to the public. So here there would be two choices, two situations. One, either it would be under subscription or it would be over subscription. So for example, 1 lakh shares applications have been issued by the company to the market and the public is not able to take the 1 lakh applications. It has come less than that. Only 90,000 applications have been sold, remaining 10,000 applications did not taken by the public. So it is called as under subscription. When the public takes more than what is offered by the company. So for example, 1 lakh applications expected, but public have taken 1,20,000 applications. So now in this case it is more than what we have issued, then it is called as over subscription. So now let me explain in a descriptive form what is under subscription. The issue is said have been undersubscribed when the company receives application for less number of shares than it offered to the public for subscription. In this case, the company is not to face any problem regarding the allotment, since every applicant will be allotted all the shares applied for. But the company can proceed with allotment provided the subscription of share is at least equal to minimum procured number of shares, which we call as minimum subscription. So if the public overshoot the minimum subscription, the company then they can allot the shares whatever requested by the public, even if it is undersubscribed. Then oversubscription. When the company receives application for more number of shares than the number of shares offered to the public for subscription, it is a case called as oversubscription. So now you can match with my example which I have quoted. when the company receives application for more number of shares, that means 1 lakh shares only they started to sell, that they received 1,20,000 shares. Then the number of shares offered to the public for subscription, then since it is more than what we have issued, it has been subscribed. So it is called as oversubscription. It is a case of oversubscription. So here a company cannot allot more shares than what it has offered. In case of oversubscription, company have few options. One option is rejection of excess applications and money to be returned. That is one option. The second option is what is that? We can make the application whatever received excess money can be adjusted towards sums due on allotment. The third option is partial acceptance of applications can be exercised. So what do you mean by partial acceptance? Which means if a shareholder, if a public have applied 2,000 shares but rejected 1,500 shares. So which means after that we no need to neglect few of the public, most of the public. So we let us accept most of the public and reject whoever applied more number of shares in proportion. So here we call as pro rata allotment. So in this way we can do the exercising the excess applications, that is oversubscribed applications. So now let me take you to the option 1, rejection of excess applications and money returned. That's the first option. So straight away option. So just reject whatever you subscribed, you got whatever you got more than what is required, and then reject that, repay the money to them. So the company may reject applications for shares in excess of the shares offered for issue, and a letter of rejection is sent to such applicants. In this case, the application money received from these applicants is refunded to them in full settlement. So here we are neglecting some of the publics. The company may lose its reputation. That is one of the chance. The public will get rejected because of such kind of rejecting letters. They would like to reject in future the same company. But however, this is a straightforward approach from the company instead of adjusting or altering the existing applicants. From that, the journal entry will be the reverse entry at the time of issue of share application. So what was the entry at the time of share application is issue of share application is bank account debited to share application account. But now we are going to reject it and refund the money. So here share application account debited to bank account only to the check sum of the rejected application only. So here application money on so and so shares refunded to the applicant. Then we'll take you to the second one. Now the second one is excess application money adjusted towards the sums due on allotment, which means instead of rejecting the excess application, if the similar shareholder public have been applying for many shares, many number of shares, then the application money can be adjusted towards the allotment money. So it is applicable only when the similar public, which means, for example, Mr. N, Mr. X, Mr. Y. So these three people have applied more number of shares, and no external people, no outside people other than these have applied. So what happens? That excess money can be transferred to allotment account. So here, the excess application money adjusted towards the sums due on allotment. If the application money received on partially accepted applications, which is more than the amount required for adjustments towards the allotment money, the excess money would be refunded. However, if the articles of the company so authorize, the directors may retain the excess money as policy in advance, which to be adjusted against the call money, which is going to be fall in the due later. And for that, we need to pass an important entries, or first is for adjusting money is share application account debited to share allotment account. It is a due entry, but before that, the excess money in the share application is adjusted with the share allotment account. The next, when you adjust that against the calls falling due on later on. So for that, the journal entry would be share application account debited to calls in advance account. So here, the adjustment of excess share application money retained as calls in advance in respect of so and so sum. So this is also another important way to calculate the adjusting the money. So here we call this as calls in advance account. So which means share application account debited to calls in advance account. These adjustments of excess share application money retained in calls in advance at the times of calls due for the first and final call, then this particular amount will be used. The second option which we have to adjust the excess money is partial acceptance of applications. In some cases, the company accepts the application subscription partially. It means that the company does not allot the full number of shares applied for. For example, if an applicant has applied for 5,000 shares and is allotted only 2,000 shares, then the applications is to be being partially accepted. The company may evolve some formula of accepting applications partially, or making proportional allotment, or make the pro rata allotment, which means that the applications are allocated shares proportionately what they applied. So in such cases, the company adjusts the excess share money received on application towards the share allotment money which are due partially accepted applications. For that, the journal entry to be recorded for the adjustment of application money towards the share allotment money. The entry comes like this: share application account debited to share allotment account, being the share applications money transferred to share allotment account. Second, the full health care. The problem would be discussed with respect to either full subscription or under subscription or over subscription. How the journal entries are we going to make with respect to the transactions? So here the subscription, it may either fully subscribed. If it is fully subscribed, there won't be any problem. You can proceed as it is. We have solved in the previous problem case study. But when it is not fully subscribed, either it comes in under subscription or over subscription, then we need to face some problem and take few more steps. If it is under subscription, then won't be a problem, but when it is comes your over subscription, there will be a problem. So now we will take one more sign with full-fledged issue of shares with oversubscription model. Right? So now I will show you the question and brief about that. The Full Healthcare Limited has offered to public for subscription 20,000 equity shares of rupees 100 each, payable as rupees 30 per share on application, rupees 30 per share on allotment, and balance on call. So what is that balance on call? Which means the face value is rupees 100, application is 30, whereas the allotment is 30, so total is 60. So balance amount in call means the remaining is 40 rupees. It is going to be first and final call money. The next thing they say is that applications were received for 30,000 shares, but they expected 20,000 shares only, but applications have been received 30,000 shares, which is more than expected. It means it is a problem of oversubscription. Here the applications for 5,000 equity shares were rejected altogether directly to the applicants. Directly to the applicants. And for those 5,000 shares, application money was returned along with the rejection letter. The remaining applicants were allotted the offered shares. Their excess application money was adjusted towards some due on allotment, which means the excess 5,000 shares have been applied by the existing applicant who applied more shares. So for them, yes, limited shares have been allotted based on pro rata. Then balance amount, whichever we received in advance from the application money, that used to be adjusted towards the allotment money. So their excess application money was adjusted towards some due on allotment, not the entire money due on allotment, whereas some due on allotment whichever we received excess from the application. So now the calls were made and duly received. Now for these transactions, we need to pause journal entries in the books of Full Healthcare Limited. So now what to do? It's the most important area now we are in. So now for this question we need to solve the sum. First before we need to make a flow chart which of the transaction comes first and which comes next, and is the receipt comes or due comes first or transfer comes, so how the rejection happens and which stage it happens. So because since there is no date, have a flow chart mentally or have in a rough paper. So what are the events, like a mind map, what are the events happens one by one in the Full Healthcare Limited, so stage by stage. So based on that you may segregate that properly. So first you make order wise the transaction so that you can pass journal entries without heavy hurdle, and you can have similar calculations along with the flow chart. That is another important area. So which means it helps you to make all the workings without any error. So now Full Healthcare Limited has offered, make a flow chart, make a diagram. So 20,000 shares. So now 30 rupees application, 30 rupees allotment, remaining 40 rupees on call money. Whereas out of 20,000, 30,000 we received, excess applications have been received. That means 10,000 excess applications have been issued. After that, 5,000 rejected directly. So all these things have a flow chart. So stage by stage, transaction by transaction. Then how many entries we can need to do? Receipt entry first or due entry first or transfer entry next. So all these things make a workings. Then go to past journal entries. So now I will explain what are the journal entries to be prepared, to be passed. So make this flow chart and then proceed towards the journal entry. First, share applications have been issued and received the money for 30,000 shares. Don't take the 20,000 because 20,000 offered, but due to the company reputation and popularity of the product, the public have raised many applications. So 30,000 applications received of rupees 30 each. So now the journal entry would be bank account debited rupees 9 lakhs. That means 3,000 shares, 30,000 shares of rupees 30 each. So 9 lakh rupees have been received from application. The second, share application money now we are going to transfer of this 9 lakh. That means of that 30,000 shares, 20,000 shares have to be transferred to capital account. 5,000 shares have been allotted, have been rejected, that have to be transferred to bank account because we need to repay the money. Remaining 5,000 shares have been adjusted towards the allotment account. That is rupees another one 5,000 shares. So 20,000 shares of rupees 30 each, 6 lakhs money transferred to capital account out of the 9 lakhs. Now 5,000 shares of rupees 30 each, 1,50,000 rupees have to be repaid to the rejected shareholders, rejected applicants. Then remaining 5,000 shares of rupees 30 each, that means rupees 1,50,000 have to be transferred to share allotment account. So these are the transaction happened. Either you make pause one by one or make it as a compound entry. Compound entry will be always better as you are a BCom student. So here overall journal entry would be share application account debited rupees 9 lakhs to share capital account rupees 6 lakhs to bank account rupees 1,50,000 to share allotment account rupees 1,50,000. So here the narration would be the being share application money of rupees 20,000 shares transferred to share capital account on their allotment. After that, 5,000 shares returned and of 5,000 shares adjusted towards some due on allotment. So these are the expected journal entry to be passed. So next, if you see the flow chart, if you draw the flow chart and follow that, next is allotment money due. So allotment money due means share allotment account debited to share capital account. How much would be the amount? Amount would be 20,000 shares of rupees 30 each, so rupees 6 lakhs. So do not worry about the process of the adjustments of share application money. In due entry, we need to check the full amount, 6 lakhs rupees debited to 6 lakhs rupees. And the next entry is bank account debited rupees 4,50,000 to share allotment account rupees 4,50,000. Being the allotment money received because we did not receive the full money from the applicants, allotted money of applicants, shareholders, because already 5,000 shares who has paid extra through the application have been adjusted. So remaining 15,000 shares of rupees 30 each have been received. So here the bank account debited rupees 4,50,000 to share allotment account rupees 4,50,000. Being the allotment money received. So now the share allotment money received rupees 4,50,000. Next, first and final called due entry. If you follow the flow chart, the mind map, whatever you have drawn, Now, what is the next is first and final call due entry. So, share first and final call account debited rupees 8 lakhs to share capital account rupees 8 lakhs. Full amount due. Due entry always take the full amount, either it is adjusted or not. Please make this in your notebook. Then, sixth journal entry is a receipt of the first and final call due money, that is bank account debited to first and final call account rupees 8 lakhs, that is 20,000 shares of rupees 40 each, that is rupees 8 lakhs. So this is how we need to pass journal entries one by one. So with this, let me stop, and I request you to prepare the entire transactions one by one. Now I will reveal the answer to you on the screen for your benefit, for your recording easily. Right? So what you need to do is that please copy that statement form, properly the journal entries form. So have a title, Full Healthcare Limited Journal Entries. Right? Receiver number. So next is the journal entry for the transfer. So please see that and copy in your notebook properly along with the reason in the bracket. Share application account debited rupees 9 lakhs to share capital account rupees 6 lakhs to bank account rupees 1,50,000 to share allotment account rupees 1,50,000. Please write in bracket with the calculations. That means share application account 30,000 shares of rupees 30 each, share capital account 20,000 shares of rupees 30 each, bank account rupees 5,000 shares of rupees 30 each, share allotment account, that means transfer to share allotment excess money 5,000 shares into rupees 30 each. So likewise, if you have the calculation in future, you need to worry about any doubts which may arise. Right. So third one, the share allotment money which is transferred to the share capital account. Right. So that is a due entry now. So share allotment account debited rupees 6 lakhs to share capital account rupees 6 lakhs. The next journal is bank account debited rupees 4,50,000 to share allotment account rupees 4,50,000. Next, share first and final call account debited rupees 8 lakhs to share capital account rupees 8 lakhs. And then the last receipt entry, bank account debited rupees 8 lakhs to first and final call account rupees 8 lakhs. So likewise, you need to pass journal entry properly. If you have your flow chart and all other in order, then also verify. And I request also to prepare this ledger account and bring up the balances and try to fill up the balance sheet. So that would be really helpful. So thank you. Have a good day. Have a wonderful weekend, and we'll continue the class in the upcoming week. Thank you.